At this time. Welcome, everyone. This should be a fun panel discussing something that's near and dear to the Miami ecosystem, which is where the startup ecosystem is these days. As we all know, for the last 5 years or so, Miami's been heralded as a mecca of startup activity. This has culminated in a new ranking where we've come on the Kauffman Foundation saying we're #1 in the nation for startup activity. So let's have a round of applause for that. Come on, that's exciting. And for those of us who've been operating that ecosystem for a while, this is no surprise. We've seen the energy, we've seen the activity. However, this panel isn't about resting on our laurels, and it's not about looking backwards. We're calling this one Miami Startups 501, the grad level course. It assumes the audience is already familiar with how we got here and what we are. And so what we're going to be lasering on, since we only have 35 minutes, is what do we need to really explode and really make this a mecca for startups in Miami. So starting to my immediate left, we have Maurice Ferre, MD, CEO and chairman of the board of InsightTech. Dr. Ferre brings over 20 years of experience in the medical device industry. InsightTech has developed a revolutionary therapy platform that combines focused ultrasound and magnetic resonance imaging to non-invasively target tissue inside the body without the need for surgical incisions. Before InsightTech, Dr. Ferre served as chairman of the board and CEO of Mako Surgical Corp., a transformational robotic surgical company that he co-founded in 2004. The company was IPO'd in 2008 and recently sold to Stryker for $1.6 billion, that's with a B, in 2013. Prior to Mako, Dr. Ferre was founder and CEO and president of Visualization Technology, which became the world leader in image-guided surgery for ENT, cranial, and orthopedic procedures before it was acquired by GE Healthcare in 2002. And to his left, we have Emiliano Abramson, co-founder and head of customer success at Nearpod. In 2012, along with his co-founders Felipe Sommer and Guido Kowalski, Emmy founded Nearpod. Nearpod is an award-winning education technology company focused on developing digital learning tools, virtual reality, and interactive content across mobile devices that provides teachers an easy and efficient way to leverage tech in the classroom. Nearpod currently reaches almost 5 million students monthly in over 10,000 schools. While most of Nearpod's usage and focus today has been in the US, the product has also seen significant adoption in leading international markets. Using Nearpod, teachers collect over 10 million insights into student learning every month. And finally, we have Randy Parker, founder, director, and CEO and chief business development officer of MD Live. Randy Parker brings more than 30 years of experience launching and building successful disruptive companies, all of which have been consumer-focused entities utilizing the latest technologies. As CEO of MD Live, over the past years, Randy has established significant relationships at the highest levels with a broad range of the country's premier health organizations, helping him to develop a vision for MD Live to be a leader in healthcare innovation, providing customers with convenient access to a complete integrated health network via a market-leading telemedicine platform. Prior to MD Live, he served as CEO of several other companies, including FlexPlay Technologies, Clearview Products, and Entertainment Resource. Welcome, gentlemen. Now, we've had an interesting cross-section here. We have an EdTech, infotechnology play, we have a telemedicine play, and of course, we have a pure play biotech. Now, as we go into, we're going to go into your business models more. We want to start off first, 1 to 1.5 minutes from each of you. Just give us an overlay of your company. I've given the bio, but it's always best to hear from the horse's mouth. Give an overlay of your company and where you are currently in your journey. We'll start with you, Dr. Ferre.
So first of all, I congratulate everybody that's here for the last show here. So congratulations to you guys for being here for the last 2 days. It's great to be here at eMerge and kind of talk a little about at least what I'm doing very quickly. I'm in the, I'm a doctor and I dedicated myself to disruptive technology. Unfortunately, I did it once in Boston. Now I did it once in Miami, and I'm committed to be part of this ecosystem down here in South Florida in the medical technology and the medical device space. So InsightTech is the conglomerate of where we put in about $300 million into this company. And what we're trying to do is really go after diseases in the brain where we can start going after these ideas where we haven't been able to treat them successfully, like brain tumors and Alzheimer's. And we're dedicated to that, so it's a pharma/biotech play. And we have over 300 employees all over the world. We work with a lot of the top engineers. We're probably at about 100 of the top academic centers around the world. And we're excited that we're going to be working with the University of Miami as one of those top tier sites in bringing this transformative technology here to our community.
Amy?
Thank you, and it's a great pleasure to be here. This is my fourth time here at eMerge, and it's great to see how the conference has grown over the years, and I hope that it continues to grow as we all love the Miami entrepreneur community and we're eager to help and develop it. In summary, Nearpod was co-founded by Guido, Felipe, and myself. We've been friends for 20-something years. This is our fourth startup together. And we went into trying to disrupt the educational industry as it was in huge need of disruption. Coming from software development before, never been in education before, we saw the need of a tool that will help teachers interact with students in a one-to-one classroom. In a one-to-one classroom means every student has a device. Instead of the teacher projecting the content in a big screen and everybody looking one direction without any interaction, with Nearpod, teachers can project their content to the student devices and let the students interact with the teacher and within each other, creating a more collaborative and engagement in the classroom. That increases the level of participation from the students, provides feedback to the teachers in real time, and let the teachers gather information in real time from the classroom that was not possible before on analog classes. We started Nearpod 5 years ago, and was impossible for us to raise money at the beginning, going into education, startup from Miami. We heard all the no's that you can possibly imagine. Cracking the educational system is very tough. Selling to districts is going to be impossible. So we decided to bootstrap for a year and a half and put the platform for free, and we followed the freemium model. After we had about 100,000 teachers using the platform and giving great reviews, we were able to raise our seed round, and then we started to monetize, and when we reached the first $1 million in revenues, we were able to close our Series A, and very recently we closed our Series B. We probably raised in our whole path about $31 million. We are based here in Miami. We raise money from Silicon Valley in Miami, and we are hiring like crazy. We've grown to 70 employees in very short time period. So I'm happy to speak about our experience and share everything we've done to help other entrepreneurs in the conference.
And finally, Randy.
I've been a disruptive entrepreneur for over 40 years. For 30 years, it was completely based on the entertainment space. Prior to the internet, licensing some of the first movie content ever to go onto home video for people to transition from seeing movies in the theater to seeing movies in the home, ultimately to see movies digitally, the transformation between Blockbuster and Netflix. In 2009, I founded a company to provide to build a health system without walls was the business plan, to provide better access to care using technology, and to absolutely disrupt healthcare by making a more efficient way to leverage technology and services. Today, MD Live has over 20 million members that we service across the United States, and an average of under 10 minutes to be able to connect a patient and a doctor, which is completely transformational, with a lot of similarities that I was able to leverage from the time in the media business, from what we saw happen in brick and mortar Blockbuster to today's Netflix digital application, are the same things that I was able to bring in that we're seeing happening in healthcare, moving from a brick and mortar healthcare system, highly inefficient, to leveraging digital healthcare services to really bend that healthcare cost curve on the planet.
Now, most of this panel is going to be to discuss challenges and resources we can bring to bear to help out the startup ecosystem. But first, we also want to identify trends as to where the new startups are coming from. And there's an interesting trend which each of you three have seen. First off, each of you have perfected a delivery model of a time-honored discipline, whether it be education, medical consultation, surgical procedures. And you also are each recidivist entrepreneurs. And I'd like to get each of your thoughts. We'll start with Dr. Ferrer and work our way down on that. Is that where we're seeing the ecosystem? Is recidivism starting to happen? That's where, if you look at Austin, the Research Triangle, Silicon Valley, that's where you really get your pop. When you have that entrepreneur who's done 1 time, 2 times, 3 times. We're here because of an entrepreneur, May Medina, that embodies that. So I'd love to get your thoughts in there. Are you seeing that as a trend within startups? And also comment on the fact that you each are basically perfecting a delivery model for something that's already traditional, sort of almost an Uber and Airbnb model.
No, so I mean, I can talk at least from my experience here in South Florida. Is when I arrived here from Boston, I spent 10 years building a company up in Boston, and then decided for family reasons to come down here, which was the best decision I ever made to come here to South Florida. And when we started Mako Surgical, I started it with Roni Abelvitz over at Magic Leap, and the two of us went off and started, when we started Mako, we went through this whole cycle of not being able to raise money. And we ended up raising about $400 million outside of the Miami ecosystem when it didn't exist. What I think is the most amazing thing that's post-Mako, fast forward 9 years, is I'm involved with at least 5 companies that have spun out of Mako. And I can tell you, and I can guarantee, the ecosystem that Magic Leap is going to be creating is going to create another ecosystem of technologies and opportunities. In the device space, in terms of where we're dealing with, there's at least 3 companies, one that's a robotic company and 2 that are sensor companies that are kind of emerging. And I think in terms of the number of employees is starting to get some real traction. So these companies in South Florida, I really believe, are moving in that direction. We specifically with Insight Tech, I see the opportunity of creating talent and building talent down here, as well as we kind of grow that ecosystem. So I do see some synergies, and I think that we have to show these companies have to be successful. We have to kind of really cheerlead them, but it's not the really big ones that make it. It's all the little ones that are kind of coming in between, and that's what creates that ecosystem.
Emmy, what's your take?
Yeah, in our case, obviously it was helpful for us, the fact that it was our 4th startup and we were very financial disciplined and we were able to hold on while we couldn't raise at the beginning. And after we raised in Silicon Valley, it was very easy to raise here in South Florida. I believe that there is a network here of investors that are willing and able to invest in companies. They just need some validation to make the leap of faith and invest. And from then on, our support from the Florida investors was unbelievable. The few companies that invested in the airport from Florida was a tremendous help. And in the 5 years that we've been here, we've seen a lot of change for the good. We see more startups, we see more momentum, we see more investors. So I'm very optimistic about the future in the ecosystem here.
I mean, just hearing about Venture City that's starting with a $100 million fund for accelerators. I mean, that's awesome. Endeavor is a huge part of this ecosystem. What the Knight Foundation has done to kind of build up this ecosystem, eMerge, all these type of things I think are really starting to create some momentum. And I really believe that we have an opportunity to really be something significant in terms of creating our own identity.
Randy, what's your take?
So I founded MD Live here in South Florida, and I raised all the initial capital. We've raised over $100 million worth of capital with the initial capital raised here in South Florida. So I believe that there is a lot of wealth in South Florida. I think what's not happened yet is that communication to the family offices and the wealth that exist here have not been as exposed to companies like eMerge and others that from this event. And so my take in being here is that there's great entrepreneurial businesses that exist. We now have validation for companies that have had success in our market, like Magic Leap and Modernizing Medicine and MD Live and others. And I think that the capital that has been deploying itself into Silicon Valley and others, a lot of it is here. It's in Miami, it's in Palm Beach. And once they get exposed to it, I think we have a great opportunity to do that. Our universities, we need to have better collaboration with our universities who are heavily investing in tech, but not necessarily driving that to the investors in the venture community.
There's a lot of themes you guys bring up. Talent, access to capital, collaboration with universities. Let's drill down those, because I think you've identified a lot of the themes that's left to really develop this ecosystem. Let's go back to capital. I know you've hit on it a number of times. How do we evangelize doing venture investing to this community? And to further double down what you just said, if I have a real estate opportunity, I could source that probably in about 1 week. There's enough people in this jurisdiction that feel comfortable with real estate. They know the terms, they know the risk, they know the exposure, and most importantly, they know how to vet out the promoters. The person who's going to come to them and say, I will take charge, take ownership of doing this project. There's not enough people here yet who feel that comfort zone when it comes to technology and venture investing. How do we empower the money here so that they feel comfortable doing that? And that's a jump ball question. Any of you?
Well, I think you lead by example, and I think really what people like to see are real success stories. So the more success stories that we can build up of exits, and people's realizing that there's an ecosystem here, I think the more we'll have it. So in cybersecurity, I think with Manny, I think that's a good example. I think that's spinning off all these companies. I think what Phil Frost has done with IVAX and the whole biotech field. I think what Mako Surgical has done in terms of these success stories. So the more and more of these type of success stories and people getting the word out, I think people start gravitating towards that. And then I think it kind of just pops in that these funds start coming. The universities, I've seen a tremendous change in the mindset of the university. You know, University of Miami is now full gun with leadership that's just absolutely impressive with the leadership of Dr. Frank. I mean, I think of the School of Engineering and what they're doing. I really see that. I see FIU, Miami-Dade, and it's happening in all these types of these ecosystems. So I think it's building out these verticals. I mean, you're hearing amongst us here, you know, an educational vertical and a medical type verticals, but I think there's a lot more being built out, and it's really exciting, and you're seeing a lot of it here in eMerge.
Randy, how do we crack open those wallets? What about peer reinforcement? If we get some of our local billionaires to commit, Phil Frost has obviously shown great leadership in that regard. Do we think the rest would follow suit and start doing more venture investing? And you don't even have to go at the billionaire level. If we just have folks who have large net worth, period, millions, tens of millions, et cetera, how do we crack that open? How do we empower them and educate them?
Yeah, so I think you do need some success stories. You need some successful exits where we're encouraging people who have worked in firms to start their own startups as well. As far as the billionaire capital, there's more family offices of high net worth individuals in South Florida than probably any place in the world. And I think that what you are going to see is that the new family offices will become the new Wall Street. They just have to be educated to see how they can invest in what this means as an asset class that traditionally is not being exposed to them. You have lots of people who are investing in early stage venture private equity here, but they're just not knowing that they can have access to these type of transactions. And as soon as they are, and you get a few champions, I think it'll pave its way. It's amazing just in the time I've been doing it, that the capital is here. It needs to be more educated, and we need to start to have more success stories from companies that have had startup and exit. You need both. And so once we get that together, I think the access to capital will not be a problem.
I think we're seeing it a lot more than we saw it 2 or 3 years ago.
A lot more.
And I think that these funds are being visible, and I think that's part of the reason why the Kaufman is saying what they're saying. So there's really good synergies that are going. At the end of the day, when it's about getting money from these family offices, I think it's starting to happen. I'm starting to see it. I've seen it in a couple of the deals that I've seen. The accelerators are kind of at the seed stage. I encourage entrepreneurs to go off and try to get that themselves and work themselves through the cycle of proving out their dreams. It's really when you get to the Series A that it becomes the hard part, right? And there's a drop off there at Series A, but you got to be tenacious. And when I started my first company, I had tons of failures before my first funding happened. So you gotta just continue drive it, and be tenacious about it, and be persistent. And I think just getting in the faces of a lot of these high net worth individuals is really important.
And I'm going to get on my soapbox for a second. I'll take my moderator hat off. this is something, it's been near and dear to my heart as a member of the ecosystem. Those of us in the audience, my fellow lawyers, accountants, bankers, et cetera, we are the portal to these people. There is no one better positioned than us as the professionals they rely on. I'm not saying you advise them to do any individual investment, but you certainly can walk them through and educate them on how to read the term sheet and how to demystify the process. For about 3 years now, the Kellogg School of Management, their Coral Gables campus, has partnered up with Greenberg Traurig as well as Accelerated Growth Partners to do just this. We've had packed houses, 200 people there each time, where we literally have gone through portfolio management training, valuation training, legalities, due diligence, et cetera. Once again, to do exactly what I said, to demystify the process. That will crack open those wallets, that will crack open the portal. But I think part of it's on us as members of this ecosystem who already feel comfortable navigating it, to continually evangelize it with the wins, promote the wins, but also promote how you do these investments. You don't have to recommend a specific investment, but you can say how to do the investment. Now let's talk talent. As you know, GE moved its corporate HQ from Fairfield, Connecticut to Boston. They obviously didn't do that because of less taxes. Boston has a higher tax regime. They didn't do that for all the other reasons people think, less crime, et cetera. They did it, at least the expressed reason was talent, talent, talent. Talent is the primary driver of corporate decisions in this modern world. How are we doing on talent? Each of you has operations that spans the globe. Inside Tech is an Israeli company. How do you feel, and yet you hire locally, how do you feel about the talent situation here? And as importantly, you mentioned about how if Magically pops, that's going to create a whole bunch of other companies. How do we make sure we retain that talent and keep it here? And this is an important question, so I'd like to hear from all three of you as to your assessment as to the talent landscape here in South Florida.
Well, I could tell you when we sold Mako, I think we had about 400, almost 500 employees. And I can tell you that a lot of the people that we recruited over that 10-year period all came, a lot of it came from out of state. And we recruited, especially a lot of the engineers, but also we did a lot of stuff with FIU. We saw a lot of activity at our local universities in bringing the folks in. But we saw a lot of people. South Florida is it's easy to sell. So I think you can really bring. Now it gets a little more challenging when you get the middle managers. It gets a little more challenging, and you have to kind of fight your way through that. But I think that we're starting to see this starting to emerge here in South Florida.
Amy, what's your take?
Yeah, I think our case is interesting. We just made a strategic decision of moving all the management team from Silicon Valley to Miami. As a founder, we founded a company here. We raised money in Silicon Valley, and obviously we were pulled to move the offices there. But we decided to stay here. We wanted to grow the company here, and now that we have the Series B and we have the full support of our investors from New York to base our operations here, we moved all the management team here, and all the recruiting we're going to do here in Miami instead of Silicon Valley. It's been great for us to recruit here, and it's a combination of bringing people from other states and other places and recruiting here. I believe that as we grow and the community grows, we will be able to fulfill all the positions from South Florida, but we have no issues whatsoever on moving people to South Florida. We've made about 10 offers in the last few months of people that were not based in South Florida, and we had no issues with bringing them here. So again, it's an easy sell to bring people here, and I would love to see more engagement from the universities. We got a ton of support from Stanford. We were incubated by Stanford in Silicon Valley, and I would love to see that from the local universities as well to help with the talent growth.
Randy, what do you see on the development front? Maurice made an interesting point that, when you get to the middle management side or senior developer side, it gets a little interesting. What are you seeing in terms of development efforts here?
Yeah, so I think that the talent acquisition and retention is the biggest risk for companies that are moving from startup into growth stages. To be able to attract the talent is difficult, and for us, now not just attracting them, but retaining them, because just tech talent in general is of high demand. There's different parts of the country that are looking to attract that talent as well as we are. And then as we become successful as a region, we're competing against each other for tech talent. And so we are continuously now, for the first time, having to really drive our retention strategies of working in our environment culturally, because we're seeing that we're taking talent from successful other companies that are in South Florida that are looking to recruit or poach the talent that we have.
All right. Now, Emmy mentioned Stanford, and Maurice has mentioned FIU and UM. I'd be remiss if I didn't go down this path. What role can the universities play? They are the incubators of talent. They're also the incubators of innovation, frankly. So, you mentioned that there's been a great collaborative effort with FIU. Can we up the game, though? Can we get our universities to, and maybe the answer is no, we can't, we're perfect. But can we up the game? What do you see the Stanfords of the world, the UTs and Austins of the world doing with their ecosystem that our universities could do?
So, I'm pretty passionate about this because I sit on a couple boards I do a lot of work. I've done a lot of work with the tech transfer offices all over the country, all over the world, for that matter. But when I look at least my experience, is that where I've been very successful in transforming companies and technologies has been with a collaboration with universities. All three companies that I have started or I'm running all kind of start at the university level. Whether the first one was from Stanford, the second was from MIT, and the third one's from Technion. And what it is really grooming and seeing the opportunity. And instead of the universities just looking at trying to license this, I think what really is the key is working collaboratively with the universities and with those inventors in the universities to kind of create that ecosystem and pulling them into the process at this early stage. And we do a lot of it all over the world. We're working with probably 30 or 40 leading institutions on developing different pieces of our technology and innovating. And I think the universities play a bigger role, but I don't think it's just the engineering departments. I think that when they combine it with other issues, for example, in healthcare, understanding health economics is a big thing. Understanding big data and processing data is a big thing. Understanding business plans and business models. So it's an interdisciplinary thing, and the ones that I kind of see the most exciting universities are the ones that kind of mix it up with the different interdisciplinary, where they're able to work within that ecosystem and create those models.
Emmy, what's your take? We're having worked with Stanford.
Yeah, I mean, Stanford provided a network of contacts and experiences. They gave us exposure to a lot of entrepreneurs that will give us great advice. We've recruited a few key recruits from Stanford. And so mirror that, I think, will be very encouraging, and also provide us a platform to test different things that we were not sure before launching. So we will test a few things in the classroom without any risks. We would love to do that in the local environment. And we were able to do that here in South Florida with private schools. Not with universities, but Pinecrest, American Heritage. Those were all our test labs before going into public schools. But having that relationship with universities in terms of connections, experiences, professors, students that will help us test, I think will be incredibly helpful.
So I absolutely agree that a great hotbed of innovation and sparking off companies tends to be universities, but a lot of these startups didn't start from a university. How can they sort of back in that connectivity to a university? And I want to take it to a more global answer. We keep bragging how we're the #1 jurisdiction in America for startups. That's really not the goal. The goal is to be the #1 jurisdiction in America for scale-ups, for scaling businesses. Now we have several of you, all three of you have great experience scaling. Randy, you've scaled some amazing companies. Dr. Ferreira goes without saying what you've accomplished. How do companies scale? And part of the answer may be, to the extent you didn't start a university, get that connectivity to really get that thought leadership. But even beyond that, I'm just curious. The simple answer is, how the heck did you do it? How did you, on multiple occasions, successfully scale companies to the kind of exit you guys saw?
I think you have to have creativity for starters. I think you have to have a really good imagination and try to visualize what's possible. And at first, everyone's going to think you're completely nuts and crazy. And then you have to then start building your toolkit to figure out how to sell the idea, which isn't that easy, but you have to kind of like really kind of believe in yourself and believe in what you're doing. And when you're going to be knocking on doors, you're going to know that you just got to be tenacious about it, and you got to fight, and you got to be opportunistic, about it, and you really have to believe in yourself and build confidence. So it really all comes from the inside, and projecting, going out. And then when you get lucky and you find somebody who kind of grabs onto it, you got to iterate. You got to iterate the process, because it's not the first idea that's going to make it. It's going to be the 10th idea, and you're going to fall at least 10 times in the process, and you can't give up. But you got to kind of just move it little by little and kind of keep in the game. And then eventually, all of a sudden, you start thinking at a much bigger scale and saying, how do I expand this? How do I make this bigger? How does this become this? And then all of a sudden, that early vision then becomes an execution story where you got to bring in talent and people. So you got to wear different hats at different stages of the game, and you got to make decisions at different cycles. It's not all about hype. It's actually about substance and believing and pacing yourself through that marathon. And it's not really made out for everybody. And you got to recognize, you got to be sharp in knowing, who to go to and who not to go to, and don't waste time.
Randy, part of MD Live's model is collaboration with large health systems. And this brings up a good point for how you scale, which is to get those early adopters. How have you and how do you get those large corporates, those large companies to be early adopters of your technology and your innovation? Because then, as you know, it becomes a domino effect because you did that validation.
I think it's important. A lot of people start businesses and they're very scared that somebody's going to take their idea and maybe copy it. But the collaboration of working with larger companies that do not have the vision, or they cannot see how to solve the big problems simply, and working with them at early stages to give them really a component that they don't have and see within their own businesses that they missed. Why Kodak started out as a film company and owned most of the patents in digital and didn't see it coming. In our case, why Verizon tried to get in, as well as Google and Microsoft. They're all partners of MD Live, and we've been able to show them that this is a complicated process of combining services and technology together. But I say that the recommendation is that embrace larger partners and keep pounding on it to see that you'll need them to be able to scale and get more global adoption of your services. Don't be feared of it.
So I was on my soapbox before, and I'll conclude with my soapbox. This is the next frontier, guys. We have an incredible asset. We have the #1 jurisdiction for startup activity. That's a great asset substantively. That's also a great asset from a branding point of view. Our goal over the next 12 to 24 months is to convert that so that we become the #1 jurisdiction for scalability of companies. And with entrepreneurs such as this and with talent such as you in the audience, I, for one, believe it's possible. So if we can have a round of applause for our panelists, that'd be wonderful. Thank you, gentlemen.